Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Tuesday, July 30th. Yesterday, I couldn't have the opportunity to do the daily recap. Sorry about that. But today, I'm going to cover both days. Yesterday, we didn't have any economic data. Today, we were just focusing on JOLTS openings that came higher than expected. This is a check in the right direction, and house price index, it's pushing prices year over year 5.7%. And at the same time, consumer confidence, it's still strong. It remains strong above estimates and consensus of 99.7. So basically today is just decent news for the economic data, but everyone is watching earnings. Today, AMD and Microsoft are going to report earnings, and we are coming into these earnings with a little bit of concerns due to Google and Tesla last week missing estimates. And in terms of earnings, yesterday we got McDonald's revenue miss estimates as consumer pullbacks worsen. Consumer discretionary, this is obviously showing weakness in spending. And also BP raises dividend as second quarter profit beats expectations. Oil is still strong, and I think long term it might be a play for long-term investors against the inflation. But basically everyone is watching AMD and Microsoft. Everyone will be watching tomorrow Meta, ARM, Qualcomm, Amazon and Intel and Apple on Thursday. This week it's huge. It's mega caps reporting earnings, and based on price action, I don't think the markets are expecting a lot. Actually, they are selling off. And let me just remove everything and just have a naked chart from the big sell-off that we came here, and we tapped here the 80-85 level, 10% pullback from all-time highs on the Nasdaq. Since then, we've been just waiting. Volatility to the extreme, but the range is huge. It's 500 points waiting and waiting for these mega cap stocks to report earnings. So yesterday, let me just start with Monday. Yesterday, real quick. During the overnight, I was just quite bullish due to the open with a gap. But then, as usually, what happens is just London opens and just removes all the cumulative delta to the opposite side for them to continue higher and chop everyone's out. What happened yesterday? We started to try to go higher, but we just removed liquidity to the downside. I was watching this and I couldn't have that. Still, I tried the long from the lows with the usual setup. Inverse fair value gap being run through, and I didn't have the opportunity for a bounce into the bullish fair value gap. So then I just, given the strong sell, I just hesitated, but I mean, risk on. Sometimes you have to trade these below average setups. This would be a B basically, and it's the same kind of setup. You take the first candle that breaks through the fair value gap, in this case the inverse, with the stop at the low of the fair value gap, and I was just trailing real aggressively. I was trailing here, but the Nasdaq keep going. I'm going, and my target was this liquidity up here. That was one of the best trades of the month. 142 points for a 1.6.3 for a 1 to 6.53 risk reward ratio. Really awesome. So then I thought, okay, we are going to see this thing breaking the range. And then what happened? Distribution and into a sell-off for the day. So today I was quite bearish. But then I saw the overnight and I was thinking, maybe the big players are playing these earnings today. But no, We've been selling off since the open with a strong volume, strong lots, strong big contracts. I've seen 80s, 90s, big volume down there. And look at where we are again. We are again at the bottom of the range in which we put this 10% down here from all-time highs. So I was watching also this level, but you know what is the saying? The saying says that as long as we continue pushing a level, that level continues weakening. And we tap the 10%, we have the opportunity. I put a lot of information into the weekly recap that I'm going to quickly link in the upper right corner. On Saturday, I told you investors are going to buy this dip on a 10%. That's what they did. They do things like this. They dollar cost average. They do some positioning. They don't have stop loss. They just want percentage of discount. But at the same time, if we tap again the 10%, that level it's weaker than the first time. And below that, we have 800s, a big pivot on the daily. Let me just show you. This is a zone or a lot of big players to just buy the dip. Big zone for day traders, but I think down here it's going to be a lot of buyers. Down here, definitely. 18,500 is going to be key for a lot of people. But right here at 10%, I will be watching this. If that taps again, I will take it along. But what happened today? Well, I was just trying to, I was a little bit more bullish than yesterday. So we tapped the first liquidity, we tapped the second liquidity, and I tried on the first liquidity along, and I got stopped out for 21 points, 400 bucks down on this trade. That's the usual setup. Bullish fair value gap into an inverse, taking the first candle, the stop at the lows. But the difference, when I usually take this, it's above the 45 EMA, that is the blue line. But we were below. And as you can see, this EMA, I love this EMA because it provides a lot of long trend days and swing day trades if you are willing to accept the management of that trade. And as you can see, until now, we are not touching, not even closing above in a strong way. So I changed my bias from bullish to bearish, and I took this inverse. Let me just put it for you. I took this inverse, and it's the same setup. The entry, the candle, the low of the candle for the bearish fair value gap, the stop at the high pivot, and I just wanted pre-market low. I wanted pre-market low that was this pivot down here at 19,076. But look at this knife. It went straight down, and I just took it down here at 19,040 ahead of 19,000 psychological level for 89 points minus 24, like 60. I mean, 60 points. I will take it every day, every day. But I had to change my bias, and you have to also do that. Sometimes you have to be nimble and flexible to adapt your bias, your setups to the price action. And that's what happened today. Now, what is happening right now? As I told you, right now we are approaching to this 10% level. Let me just put the 10% down here, big time, big level. And we just took this pivot on that day at 18,941. I have a Fibonacci retracement here in case it wanted to just pull back and then take the 10%. If we pull back up here, I will just not take any more longs if we pull back again to the 10%. So I'm tracking the Fib retracement, the 50% retracement, it's around this 50-minute fair value gap, or even I would say this one, it's even better. So be really careful if you are willing to trade this, because that is going, if you are going to short down here, that's the worst location, because I would say that buyers will start recommitting again here into a push, and that would be a bounce for sellers to again push back down. And in this range, there's like from 900s to 120, there's like 250 points. Today, the Nasdaq, it's super volatile. 1, 2, 3, 4, 5 straight 30-minute candles in the red. So at some point, sellers will exhaust and will not sell it anymore. We have the point of control down here, and we have a lot of congruent levels down here from day traders and also from big investors. So think twice if you are going to short down here, because I think I would prefer something like a go below rejection into another low setup instead of shorting here for this kind of reward. You might be shorting that and forget about taking any exit down here, because that would be your trap and you will be squeezed. So be really careful, because I think into earnings, we are super red. And if some of them, if AMD or Microsoft pushes a little bit of earnings and revenue and EPS or something, this might squeeze a lot of shorts that are deep today, big pockets shorts today against any kind of levels. So again, price action is king. We are bearish, but be really careful shorting down here. And I think that's all from my side. I'm not going to cover dollar. I'm not going to cover yields. The only thing that I'm going to cover is the inverted yield curve that I'm watching really, really close. This is the third time since October last year that marked the bottom of the market. This is the third time that we tapped this level. We are pushing pretty heavy into the uninversion, because the 2-year yield it's selling off while the 10-year is remaining strong. Long-term economy is not pricing in a recession yet, but the 2-year, due to the betting of the Fed cutting rates in September, it's more and more going lower. So the inverted yield curve is basically pushing higher to an inversion. We are reaching levels not seen since October 2023. So be really careful, because this is going to cause a lot of volatility and downside risk. If you are not investing, if you are day trading, just be aware of that. Be aware of what is happening with yields, but just follow price action. We are making new lows. As I was saying, we are approaching the 10%. Be really careful shorting down here. The better risk versus reward is to the long side. Be smart, be patient, and be disciplined, because that's the key for your success. If you found this video useful, thank you for the support. Thank you for the subscribers. Give it a like and come every day to my channel, because I will be waiting for you, ready to explain how I trade, how I see these markets, and for you to learn and get experience for your analysis, for your ideas, for your setups, for your strategies. Again, thank you for the support. I hope you are having a nice day. If you were long, I hope you were managing your risk. These days, that trend to the downside, as you can see by the 45 EMA, is pretty well respected. So if you are with profits, just take those profits and run, because what is coming is going to cause a lot of volatility. The VIX is 17.56, 5% in the red today, and we are approaching MEGACAP earnings. So be really careful, manage your risk, because this is going to be huge. Stay safe, everyone, and see you tomorrow.